Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about the earnings sell-off, Discover's earnings, and Bitcoin's comeback. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The market has sold off hard for the past 3 days as earnings continue to roll in. What's the reason for the sell-off?
Well, good morning, everyone, and thank you, Allison, for that intro. So here we are on day three. The market's already open, just about an hour after the open here, and you can see we're in the red again. So this is 3 days in a row. When you kind of rewind back to the beginning of 2023, kind of had that nice jump. We're up around 5-6% on the year, and now we've started to sell off a little bit. So how far is it going to go? Well, here's what the market is struggling with is inflation is on the, is waning, if you will. So the rate hikes are working. So now it really gets into a discussion of how many more rate hikes are necessary and, what they're going to look like. So, our next Fed rate hike is projected to be in February. A lot of folks are saying that it's going to be 25 basis points instead of the 50 that it was last time, and then maybe one more, and then that should be it. That would be kind of the soft landing scenario that everybody's hoping for. However, if you see another 50 basis point rate hike, then yeah, that could spook the market. So I think that in general, a lot of the financial CEOs, you can see down here, Jamie Dimon, bring him up here, is, they're starting to say, hey, we really might want to consider slowing down significantly here to avoid throwing ourselves into a huge recession. So, and I think they're being heard, to be honest. So overall, those are the forces that are going on. Is what's the Fed? The Fed thinks they need to do something. The CEOs are starting to say, hey, let's be a bit careful here. But overall, we've seen a lot of the financials release earnings, and the reason, sometimes even good news can be bad news, because the good news is the companies are beating earnings, even though we had a couple that didn't. Goldman obviously was one of them. But they're beating earnings, but there's so much gloom and doom on the horizon with the potential recession that the market's actually saying, okay, you beat earnings, but that doesn't, that may not matter going forth in 2023. So that's overall what the market is struggling with. 3 down days so far, or in a row here. If this one holds as a down day. But the good news is, as NASDAQ pulls up here, is, even after this move down today, we're still up that 3.67% on the year. So for the year, we're still up, and I don't think we're going to go back and visit these lows of December or the November lows, but you never know. But that's what the market is overall struggling with.
Next, Discover stock is down 7% after beating earnings. Is ticker DFS a buy, sell, or hold?
I think that's a great question, because we talked about the financials, and obviously credit cards are involved in that, not just the big banks. I talked to my investment advisory board on January 5th saying financials are going to be a place to be in 2023. So even though they're beating earnings and beat expectations, here the stock's selling off. So again, why is that? Well, it's because if everything's healthy enough, then the Fed is going to feel that they have the ammunition to continue the rate hikes, which could again mean, if we're in a recession, or if we get into a recession, it's going to be pretty significant. So that's where overall with the financials, I think they're going to be good investments, but they're not quite good investments right now, if you will. I still think it's a little bit too early. But as we pull up the chart here, go to a 1 year and look at the valuation. So here's your 1 year chart on Discover. It's, it did pop a little bit. It was down 7% earlier at the open. Now it's only down 3%. But overall, from a valuation, around 6 for a financial, I think these things are going to be cheap. Do you want, when it's time to buy, which again, I think it's too early. But when you get around to investing in financials, you can either go individual names, which I do like Discover. I don't have it in the book right now, or just go with the XLF, which again is all of the banks and financials kind of into one. So that's generally the better play out there. But overall, too early. Don't really need to pile into it right now.
Last, Bitcoin is back over $20,000. Is the bottom in?
Well, Bitcoin again is just like it's kind of always been. It's the great unknown, right? There are certainly people that that believe and think it's the future. And it, last year we had the FTX, debacle, if you will, where fraud involved, or alleged fraud, I guess I should say. But certainly people lost money hand over fist investing in the FTX exchange. So all of the cryptos got hit. So here's a 1-year chart that's kind of bounced up. So you can see that late, the summer, you started the year last year, Bitcoin was supposed to be kind of the place to store value when the market's getting hit. So at the beginning of the year, interest rates were going up because of the Fed, and money was flowing out into Bitcoin. Obviously, it got up to above 45,000 here. And then in the next few months, people realized, nope, that's not it. So it dropped down to below 20. And it's kind of been bouncing around to around 20 until November. And then we have the FTX debacle, and it gets down to around 17 here. And was kind of a straight line across. So is Bitcoin back? I'd say yes, because 20,000 has been kind of the magic area where, it stabilized here for half the year. So it kind of made all that back. So here's my take on whether you should be in Bitcoin or not. If you believe, then you need to own some of it, right? If you think these digital currencies are the wave of the future, you absolutely need to own some of it, whether you do it individually through your own coin wallet, or you do it through an open market mechanism like the Bitcoin Trust that we were in last year when we were into the Bitcoin deal, if you will. If you don't believe, you have no business. You don't need to invest in this and all. It's the worst case is you're going to have some FOMO, some fear of missing out if this thing does go up to 100 or whatever. But I would still say that with investments, you look at like Discover, and Discover's been around for decades. Discover Financial Services, that is, and if you buy into Discover stock, it's not going to zero, right? Cryptocurrency still could go to zero. Right? These things just could completely go away. I know people out there saying, well, no, it can't, blah, blah, blah. Well, it could. So we'll have to see how it plays out. But why I like Bitcoin over there, cryptos, is there's a finite there's a finite supply, right? So it can't really be manipulated from that level, as in they just make more. But we shall see. The jury's out. Like I said, if you believe and you want some, get a little bit of your portfolio. If you don't, you don't need to be in it all. There's other things out there that can make you money.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.